Hi everyone, good evening. It's 5 p.m. on the clock, which means it's time for the Money Show. This is your daily dose of personal finances where we tell you what's happening around the world and how it affects your wallet and your personal finances. I'm Rubina Kapasi and let's tell you what we have lined up on today's episode of the show. If you've been watching ET now these last couple of days, you'll notice the one trend that's really dominating is the way home loan rates have tanked. All the major banks, right from State Bank of India, HDFC Bank, ICICI, Kotak, have not just slashed the interest rates that they are offering on home loans, but they're also providing all sorts of concessions, discounts on the various fees associated with taking a home loan. So how does that benefit you? Firstly, if you are already having a home loan outstanding, what can you do to cut down your next EMI bill? And secondly, if let's say you have been buying a home on your mind since the last couple of months, but just can't figure out when is the right time to do so. Now, with interest rates tanking so much, is this a good time to actually dive into the property market, by taking a loan for the same? That's what we'll be discussing on today's episode. And of course, we'll also be answering your questions and queries. You can write into us on the Money Show at etnow.tv. So if you're perplexed regarding your outstanding home loan, what you can do to bring down your EMI bill, stay tuned to the Money Show and of course write into us. I'll repeat the email address, themoneyshow at etnow.tv. So to take forward this conversation, I have with me Ratan Chaudhary. He is the head for home loans with PaisaBazaar.com. Ratan, many thanks for joining us today on ET Now. Ratan, I'm sure you have a plethora of all the information provided by banks, by financial companies with respect to the offers they're providing, the rates of interest, on home loans. What is the general trend you're observing? Because from what we understand, banks are not just simply slashing interest rates, but they're also sort of doing their best to perhaps attract customers, gain a bit of the home loan market share as well.
Yeah, so in the last few months, we have actually noticed that the interest rates have started going down. And normally in the festive season, most of the banks usually slash down their rates. But this time the rate has gone. In the last 1 decade, I haven't seen anything as low as this. So the rates are as low as 6.7% to start with. And along with that, banks have given multiple offers clubbed with a low rate of interest like processing fee waivers. Then also for a certain set of developers, they have got special schemes, special interest rates. For a category of salaried customers who are working with, say, top MNCs or top companies in India, or maybe they have had salary accounts with these banks, they are being given a special rate. So it's not only about the lower interest rate that we are observing. We are also seeing a trend in which banks are actually trying to lure as many customers as possible during this festive season.
Okay. So with home loan rates, like you mentioned, being at rock bottom, at decadal lows, what are the options before people who have existing home loans outstanding?
Yeah, sure. As I've been always been telling, that there is no right time to take a home loan. If you have decided that you have to purchase a property, home loan is a secondary requirement. Just to facilitate purchase of a property, you necessarily have to take a home loan. Now, switching a home loan. So in case you have a home loan running, this is the best time to actually switch your home loan. And because the interest rates are as low as, say, 6.7 for a ticket size which is less than 30 lakh, in between 6.85 to 7% or even 7.1% for a few banks for a ticket size which is say above 30 lakh or above 75 lakh. So in case you have a loan running, mostly those will be in the bracket of 7.5 to 8.5 at times 9%. This is the right time to renegotiate and switch your lender in case you're finding your existing rates to be higher. The second benefit which also might come in switching a home loan is that you might go for extension of tenor which will considerably reduce your EMIs. So both ways, I think it's beneficial for a customer who's already having a home loan running to discuss with multiple lenders to see that if the interest rates can be brought down as well as EMIs can be brought down.
So if you've not yet, bought a home for yourself, or it's been on your mind since a very long time, and of course you want to take the assistance of, a loan from a bank or, financial company to do so, like Ratan said, there's never a bad time or a good time. You can just go ahead and do so. And now, of course, the added incentive is the fact that, interest rates are so low. So that, I guess, would be, definitely an added incentive. But yeah, for those individuals who already have a home loan outstanding, it definitely does, sort of help if you consider refinancing your loan. What exactly does that entail? Well, it essentially means that taking the balance loan outstanding that you have of your home loan and sort of transferring it either to another or a lower interest rate regime within the same bank, or to another bank which may be offering you a lower interest rate regime. But Ratan, I'm sure this is not something that would be easy to do or would come without costs. So Ratan, what can an individual expect when he or she is looking to refinance or switch over their loan?
So basically, if you have a home loan running and in case your renegotiation with your existing lender has failed for some reason and your interest rates are not being brought down, then you can think of switching your existing loan to another lender. Definitely it does come with a cost. So there will be a processing fee, there will be other costs associated because the new lender has to actually reassess your application. And right now, as I told, that this is the right time because there are many banks and many HFCs which have actually waived off the processing fee during this festive season. So it's not only about interest rates being lower, it's like you can switch your home loan at almost zero cost. Now, the reason to switch is not only because you want to go for a lower rate of interest. At times, customers, might be looking for a top-up loan during this season, for their personal requirement. They need some 5-10% extra. That top-up can also be availed either at same rate or maybe at a marginal 0.1, 0.2% higher rate of interest. So because of all these benefits associated, this is the right time to switch your loan. Now, to answer your second question, that what are the things that a customer should look forward to? First is that you should definitely compare the rate of interest. Second is in case there is a cost involved, so you need to do the total cost benefit analysis. If the cost of switching is higher, then you must not go for home loan refinance. But in case the lender is ready to waive off your processing fee, then this is in your favor. Lastly, you might like to keep the EMI same. So sometimes, a customer, what they see is that going for a revised higher tenor is bringing down their EMI. But in the longer run, that increases your overall interest cost. So basically, you should keep your EMI same if you are comfortable in repaying that and bring down your tenor. Otherwise, you can go for a higher tenor and lower EMI as well. So these are the things which a customer should keep in mind before deciding to get his home loan refinanced.
Excuse me. Okay. All right. So just some things to keep in mind. I hope all of you have taken note of that because, like I mentioned, there are several moving parts when you consider sort of shifting your loan, or what we say in more banking parlance, refinancing your loan. Okay. Ratan, there's MCLR loan, there's repo link loan, and then of course you have your fixed rate home loans as well. At this juncture, and let's say that right now this is for your new borrowers, what would be your pecking order, your preference at this juncture between these three variety of home loans offered?
So see, in between fixed rate and variable rate, most of the banks actually are offering variable rate home loan which is at a lower rate. For fixed rate, there are a few things which a customer should know before he's taking the decision. Like in case you have to make part payments or pre-close your loan, there is a pre-closure penalty which you have to pay. For variable rate home loans, there is no pre-closure or part payment penalty. So in case you are going for a variable rate home loan, then at the back of your mind, you are totally comfortable that even if there is a decision which needs to be taken after a year or so to switch your loan, or in case you are selling your property and that's why you need to close your loan, for all those reasons, there will be no pre-closure penalty on your home loan. But a fixed rate home loan comes with a part payment or pre-closure penalty. That's one thing that you should always keep in mind. Apart from that, for as you asked for in between MCLR and repo rate, so MCLR was the previous regime in which your existing home loan was fixed to an internal benchmark of the bank. So when I talk about internal benchmark, is that okay, based on certain criteria, banks had prefixed it, but it is still bank's discretion to increase or decrease it. In the current scenario, all the banks have switched to external benchmarking rate, which is, say, most of the banks have taken a call to link it with repo rate. So that means that once the loan has been given to a customer, bank has no control on future rate of interest. So it will be completely governed by your margin with the base rate, margin with the repo rate. And as and when your RBI revises the repo rate, your interest rate will go up or down. So this is a basic difference in between MCLR and base rate, that in the previous regime, bank had complete control on the rate of interest of a customer. Right now, once they have decided, suppose somebody has given you a loan at 7%, then that margin of 3% compared to the current base repo rate is fixed forever. So then bank has no say on deciding future interest rate of a customer. So this is the basic difference.
Okay, just a very basic difference explained. One very important note of caution that if you are, let's say, on a fixed rate home loan and you want to, move over to more a variable rate, which is MCLR or repo, you'll have to perhaps pay a prepayment penalty or a charge. Because in a way, when you're refinancing, it's as good as a prepayment itself. So you have to perhaps be a bit cautious on that. Ask your banker, about what will be the prepayment charges, and then accordingly, take a call. Okay, let's talk now about that aspect of prepayment, Ratan. And we've been asked this question quite often, that and there are various varieties of questions that come in. For example, somebody will say that, okay, I got windfall gains perhaps due to some inheritance from, a relative, or for whatever reason I've got some money saved up and it's lying in a fixed deposit, or, it's basically lying in my bank account. Now, that person has two options. One, invest it in the market, or two, perhaps at least prepay their loan. They're really puzzled between what to do. Is it a good idea to prepay the loan? And again, for simplicity's sake, let's assume it's a variable rate loan. Is that something you would advise, Ratan, that people should sort of always try to prepay their loan and bring down the debt level?
So basically, in the current scenario, there are many products being offered by a bank, and whether to continue with the loan or to part pay or pre-close the loan is a decision which customer has to take himself. Now, if I have to choose in between a customer who has got surplus available and he has to decide whether or not he wants to close his loan or he wants to continue repaying the EMIs and would be comfortable investing that money, say in somewhere else, or maybe in FDs. There is a smart home loan or home saver option, being offered by bank these days. In that, you can deposit the surplus in a current account or a savings account which is linked to the home loan. For the money that you have parked in that current or savings account, there is no interest charge. So to explain it further, suppose you have taken a home loan of, let's say, 50 lakh rupees and you have got 20 lakh surplus. Now there are two options. Either you can part pay that 20 lakh and reduce your home loan outstanding to 30 lakh, or you can reinvest it, say elsewhere, or you can park in some FDs. One option being offered by, say, few players these days are smart home, where they will open a current account and link it to your home loan. You put that money, 20 lakh rupees, in your current account, your home loan automatically reduces by 30 lakh. So that means you actually have the benefit of part paying the home loan and enjoy the liquidity at the same time. So this is one of the better options which actually customers should consider before part paying their loan or pre-closing their loan, because for some reason in future, if they need liquidity, then it might not be available immediately. So this option gives you liquidity as well as the option of technically part paying it. So I would actually suggest customers, in fact, that they can go for this option if they have surplus available.
Okay, all right. So to solve everyone's conundrum at this juncture, what to do if you have a little bit of extra cash lying. Though, of course, I understand that we are in the midst of, this pandemic and with salary cuts, etc. in place. Many may not find, themselves in that fortunate situation, but at least for the benefit of the few who do find themselves in this situation, here is a solution, where you can optimize the utilization of that extra cash, by putting it to the best use. All right. Just before I take on board some questions and queries as well that we've received from our viewers, just very quickly, Ratan, in case if our viewers are just tuning in, I know you mentioned this before, but would you say that right now, given what we are looking at as home prices, given at what we are looking, in terms of offers provided by banks, etc., firstly, is it a good time for people to finally take the decision that yes, now is a great time to sort of, take a loan and buy that dream property? And secondly, do you think it is easier as well for a customer today to get a home loan approved?
Yeah, so the first part, actually I had explained earlier as well that there is no right time to take a home loan. In fact, if you have decided on a property, just go for a home loan. But yes, there are two things, you must look into. One is that this is a great time because interest rates are at their lowest and banks are coming up with offers like complete fee waiver. Second thing is that whenever the interest rates are lower, your eligibility to avail a home loan is always higher. So in case you are struggling with the, say, quantum of loan, then this is the right time that you should go for a home loan. And could you just repeat the second question?
The second question actually, Ratan, was with respect to whether it is easier for a customer to go and get a loan for themselves. And I also actually, since, I'm asking the question again, want to get in your take on the context of the recent announcement as well from the RBI during their monetary policy meeting about, the home loan risk weights.
Yeah, so I mean, this entire home loan segment has been seeing conversion rates or lower turnaround times. And right now, the process is becoming more online friendly. So as far as ease of availing a home loan is concerned, it's far better than it used to be, say, a year or 2 years ago. Second thing is that regarding the recent announcement, so the ticket segment of 75 lakh above, there are few banks which have already announced a lower rate of interest. So for those segment as well, that is 75 lakh above loan amount, I think since the interest rates have further gone down, this might be a good time to decide in case you were undecided 2-3 months ago, to go for a home loan.
Okay. All right. Well, you know what, Ratan, I request you to stay on with us, folks, you as well. We'll take a very short break on the show, but when we return, we've got a couple of questions and queries from our viewers. If you'd like to write into us as well and ask your question to Ratan, you can write in on the Money Show at etnow.tv. We'll take a very short break and be right back.